Happy Freight Friday! So great to have you here. We have a couple of market experts that are going to talk about the volatility, some serious stuff happening out there. We've got Henry Byers. He is going to be telling us what is happening on the geopolitical front and what is happening there. And we've got, making his inaugural appearance, is Seth Holm talking about the volatility on the stock front. Let's get started. Henry Byers, hey man, how you doing?
Hey Chad, how's it going, man?
I'm great. You know, I'm a little tired from Transparency 19. It was so exciting, and I'm running on fumes, but I'm doing good. How are you?
Doing well, doing well. We also had some interesting stuff happen while we were at Transparency 19 on the international front.
Yes.
As we know, China and the U.S. don't seem to be reaching much of a trade deal at the moment. Things are certainly getting very volatile in those discussions. So I want to turn to the FreightWaves Baltic Index. China, North America, West Coast. This is a 40-foot, a spot rate for a 40-foot container from China to North American West Coast. I wanted to show what happened last year as a result of the trade war, just briefly, and how that could potentially play out in the truckload market with this next round of trade discussions. So if we look here at April, and we compare that year over year, we're seeing a jump here. Then we saw kind of a staircase. And then once those tariffs were announced, and in conjunction with peak season, we saw those really jump up. I would expect that to look pretty similar this year in terms of raising each 15-day period that rates are going to rise. We may not get quite that dip before peak season due to these tariff concerns. We may see it increase more, but I would expect to see something very similar in case, in the event that we're not able to reach an agreement.
Another stair-stepping of freight spot rates.
Sure.
Okay.
And the West Coast, so of all the market share of all the ports in the United States, the West Coast, specifically Long Beach and LAX, Los Angeles, they handle a little over the third of the entire country's volume. So this is extremely important to the truckload market. So I wanted to I was talking about this a little bit at Transparency 19. I wanted to point it out here because this is how this port specifically could impact the truckload market. If we look all the way back to here, we actually are able to see this is when the port strikes were happening in the port of LAX, when we saw all those massive ships off the coast waiting to get unloaded. Once those came in, we did see a spike, and what I have in blue here is DAT Van Freight Rate Index for LAX to Dallas. And we saw that spike there, and then overlaid I have new truck orders.
Yeah.
So as we know, a raise in spot rates is highly correlated with a spike in new truck orders. So once all that volume came into the ports, we did see a jump there in new truck orders.
In 2015, we got
exactly,
5 years.
Exactly. So then let's bring it over to the trade war here. Obviously, new truck orders were a big thing heading to the end of 2018 because economy's booming. Having some of the best retail periods we've ever seen. Exactly. So, and then look at the trade war's effects on the truckload market and spot rates. Now, we have seen a lot of capacity come online due to these two peaks here.
Yes.
So we're not quite sure how much capacity there is and how that will play out if there is a massive influx of volumes to LAX. But we would expect to see truckload rates rise out of that market.
Certainly they have plummeted aplenty, right?
Absolutely, absolutely. So again, just something to watch out for. Now I wanted to switch to another volatile area at the moment in terms of international shipping, which is the Panama Canal. So Lake Gatun is the world's largest artificial lake, and it actually feeds the water into the locks for the Panama Canal. So if we zoom in right here, we actually see what that looks like. We see ships right here. We see where the water fills up, enables those ships to move through the canal, and enables them to raise up above what would be sea level, travel through the lake, and again on the other side. Right now they're experiencing a drought. So Lake Gatun also serves as a water source for a good deal of farmers in the area as well. There is a lot of produce that comes out of that area, so it's certainly something to watch out for. We'll be certainly monitoring it closely. I wanted to point it out because in all these tariff trade discussions, the volatility in the ocean market, that's certainly going to be a factor.
You mean the fact that there's a drought there?
Yes, because because the draft size of those vessels, the depth that they can go in the water has been reduced. If it gets reduced further, that means less cargo can move through there. So your big time East Coast importers in Savannah, New York, potentially may not be able to get as much cargo through there. When capacity reduces, you may see even more come into the port of LAX. Then another area of volatility, the Persian Gulf. The U.S. military has sent quite a bit of military equipment, aircraft carrier, few destroyers, B-52 bombers, right into this region here. Just recently, today, they've announced that Iran could potentially, they could focus on commercial vessels in the short term. So I wanted to point that out because another massive, trade lane in terms of China to the U.S. if the drought were to affect the normal routing would be the Suez Canal. And that's right here. That's another canal that enables those ships to travel, through the Mediterranean and to the east coast of the United States. So military conflict in that region, we know that Saudi Arabia and Yemen have been going back and forth for quite some time. It's an important trade lane for ships.
Really is. Wow, bringing it home, closing down the week with some authority. Thank you, Henry. That is a very nice overlook. And I mean, it's a troubling situation, but whether it's weather or other, geopolitical issues, trade wars, military operations, there is a lot of volatility and uncertainty right now. And making his inaugural debut, I know that's redundant, that's just what we do around here. Seth Holm, he is, you're going to tell us about, speaking of volatility, what have you got up your sleeve?
Thanks, Chad. So we're going to start off here with the chart of the S&P 500. Just to give you an overview here, the S&P hit an all-time high in September of about 290. And then on September 24th, 2018, President Trump implemented the first round of $200 billion in tariffs at 10%. And so as you can see, the consequences of that was in Q4 of 2018, we saw a big stock market crash, right? We had a 20% correction here, as you can see here.
Yes.
Then at the end of the year, trade tensions eased, and we saw a big V-shaped bottom here. But just in the last week, there's been some news, right? So President Trump has today, as of May 10th, implemented the 10% tariffs have gone to 25% on the $200 billion in goods. And so what we've seen here is the market's started to go back down sharply again. In fact, we just had the worst week in the stock market of 2019. We lost about 3 to 4% here.
Wow.
And then so the second chart I've got for you is a chart of China, their market here. So this one is a little bit more difficult to decipher because their market was doing very poorly actually prior to the trade war taking off in September because the economy was slowing pretty dramatically. But you can still see here their market had a pretty big crash from 43 to 37 in a few weeks here. It kind of recovered, gave it back, recovered again, and then it's also crashed way more than the US has here in the last week. So we also took a look at two stocks. These are two American stocks that are kind of poster children for the trade war here. And as I'm going to explain, I'm going to turn to Apple first. Apple. So Apple is an iconic American brand that everyone knows. Apple hit an all-time high of about $230 back in September. We got the implementation of the first round of tariffs in September, and a lot of Chinese consumers boycotted their phones. So what that means in terms of numbers is Apple's smartphone share actually peaked at around 30% in early 2018. But by the end of the year, it had fallen all the way to 18%.
Wow.
And so they just, in their most recent reported quarter here for March, their overall China revenue actually fell 22%. Now it's kind of bottomed and stabilized, but if this thing continues, the standoff continues to heat up and get worse, it's going to get bad for Apple again. And then finally, on the last stock we took a look at is Caterpillar, right? Caterpillar is a proxy for global capital spending, right? In addition to that, Caterpillar gets a lot of their input costs in terms of steel and other things from China. So Caterpillar, as you can see here, got whacked from about 160 to about 115 in about a week.
That is a precipitous fall.
And this is a large cap company, so that is a huge loss. And so Caterpillar is back in the spotlight again. It is also corrected. This will be one that's likely going to get hit again for two reasons. Their input costs have gone up by hundreds of millions of dollars just from the 10%. So as that goes to 25%, it'll even get worse. And then their revenue, given when the Chinese economy suffers, that they are a huge driver of global capital spending, so that's going to hit their revenues as well.
Wow, heavy hitting stuff today. Seth, so when a trade war happens, is it true that there really are no winners, that everyone's a loser?
That's the general conception by most economists, and I think that would be true in this case. It's likely to hurt both the U.S. and China. However, we believe that it's likely to hurt China actually worse because in terms of the trade imbalance, we have a $420 billion net deficit with China, but what that means is we're importing $540 billion in goods from them, and we're only exporting $120 billion. So they have 4 to 5 times more to lose in terms of just the size of the impact.
Wow, thanks. That's really excellent stuff too. Great to have you on, Seth. And no good deed goes unpunished. That means you're going to have to start coming on more. All right. Wow, are we closing it down hard? What a wild week. I'm exhausted, but still, there is so much content that we've been putting out there. Check it out. We live streamed the entire event. We've been having hundreds of conversations, and we're documenting a whole lot of our experiences too on our podcast. We're just coming out with special edition after special edition if you want to check out What the Truck. Meanwhile, here on FreightWaves Now, we are bringing it to you what is happening right now each and every business day. And now we're so excited about Sonar 4.0. Can't you see? We've totally leveled up. It's like playing with the PS4 when you were with the Nintendo 64. Well, not that dramatic, but hey, it is pretty exciting, and we're glad to be able to share our new information with you, and we look forward to you checking it out as well. If you want to have a demo, just go to freightwaves.com/sonar and we'll get you right in the queue. We've got some people who can really explain it and make it super easy to begin using right away. So thank you for tuning in. And in the meantime, don't worry, be happy.